Hello and welcome to Chapter 23, Homework, homework, woo woo, with your host, Professor Naragon, coming back to show you how do we basically solve these scenarios that we were part in the actual notes for Chapter 23 for Managerial Accounting. Yes! So, let's go ahead and start off. Again, we got some videos. I will always encourage you to look at these videos. They'll help you out. Boom, boom. And then, let's see. Wow, lots of videos. So, we start off with question number 7. Again, let me zoom this in for y'all. So, question number 7 is dealing with Radar Company, and they're selling bikes for $350 each, and they sell about 5,350 per year, which is cool, and they make as many as 5,000 bikes per year. Right. The bikes cost about $285 each to make, $155 in variable cost, and $130 in fixed cost. They receive an offer. We have received an offer from a potential customer who wants to buy 875 bikes for that $310 each. Cool. So, they actually state that incremental fixed cost, again, incremental means additional. Okay? And that's what we're going to focus on. Of this order is $44,000. No other costs will change. Cool. That's awesome. Let's go see what we need to do, and that is, should we accept this order or should we just reject it? Well, first off, contribute your margin. From prior chapters, we've learned that this is always going to be our sales. Let me back it out just a little bit so you can see. Sales minus variable cost. Okay? It's always those. So when we look at incremental per unit, one, we got to see how much are these now going to sell for. Well, this potential customer wants to buy them for $310. Cool. Variable cost, it states right here, no other cost will be changed except for the fixed cost. So, we look at what our variable costs already are. Happens to be $155. And so, we can figure out contribute margin, which of course we got to go to our calculator and go 310 minus 155. Happens to be just 155. Woo! So, half our cost right there. Now, we have to take our fixed cost. And our fixed cost has changed. It is now $44,000. Cool. So, $44,000. Of course, it's not going to change over here. So, it is still $44,000. But we have to figure out incremental income for the new business. So we're going to take 875 and times it by these three amounts over here. So 875 times 310 means we'll get $271,250 in actual revenue from this. Basically, take 875 times 155, 135,625. And since this was exactly half, we already did the calculation. For me, if you don't have exactly half right here, make sure you do the calculation or subtract sales from variable cost. Will still get you the same amount. Alright? So next, we take our 135,625 and subtract out the 44,000, the additional fixed cost that's going to happen. So we end up with 91,625. So before we answer the question, let's check, make sure our math is correct. It is. Awesome. So now let's answer the question. Should the company accept or reject? Well, there's an income. You definitely want to accept it. If it was a loss, you're going to reject. So again, finish, check my work. Boom. Answer is complete and correct. And we're good to go. Yay! Not too much with these. Again, it's just reading the problem and understand what increased. Here, again, they want to buy this amount of bikes for this, this group of bikes for this much, and then we just have to figure out what costs are going to be associated with the potential new business. Again, a lot of businesses go through this a lot. Customers always want to go cheap, but we every now and then get it good, we get it bad. Alright, so question 8. Zyacor currently buys a component for $9, and they believe we can make it. Yes, for a cheaper price. Let's see if we can. So they think making a part will cost them only $4.25 per unit of direct materials and $1.15 for direct labor. They have a predetermined overhead rate of 210%, which we don't care about because that's overall again. We care about the incremental overhead rate of 60 cents per unit. So first off, we got make or buy. So with our make and buy, first off, we're going to buy it for $9. So that's our comparison right there. The make part is we got to take the our big three, and add them together. So 4.25 plus 1.15 plus 0.6 says it's going to be $6. So really the difference here is $3. It's $3 cheaper for us to make it. So question 1B is going to say, should we buy or make? And the answer is going to be make. Again, check my work, make sure your amounts are correct. They are. And of course, you can check if you made the right decision. We did. Awesome. Let's move on. Cool. So, question number 9. Holmes Company produces product that can be further either sold or processed further. Okay, so our decision is, should we sell it now or just keep going and try and sell it a little bit better? So Holmes has already spent $86,000 to produce 2,300 units that can be sold now for $87,500 to another manufacturer. Alternatively, Holmes, this makes me feel like Watson should be involved in this. Watson. It's elementary, my dear Watson. So, units further to increment cost of $260 per unit. If Holmes process further, the units can be sold for $440 each. Okay, cool. Compute the incremental income if Holmes processes further. Okay, so sell it as is. Well, we've already spent $86,000. Okay, we don't care. So $87,500 is our sell. Again, income is $87,500. And again, check my work just to make sure, just in case Connect wants to do something weird. It really doesn't. There's no additional processing cost. If we process further though, well, we process further, incremental cost is $260 per unit. Well, we have 2,300. So let's actually change this. So 2,300. Oh, not plus. times 260 is 598,000. That's our cost. So, and then to process further, actually, let's make sure that they're trying to do that right there. Yeah, that's what they're doing. Sometimes Connect wants you to do it per unit base and then do the incremental amount. I don't know why, but sometimes they do. So, we can sell it for 440. So, times 440. Oh, we can make over $1 million. Yay, $1 million. 1, 0, 1, 12, 1, 2, 3. Okay, now all we gotta do is find the difference. So, our income minus our cost, we got 414. Okay, so that's cool. It's gonna have me check my work, make sure everything's good. Next part is this incremental amount. Okay, so where Connect wants to probably do it is take 1012, 123 minus what we could sell as 87,500, 924,500. Let's see if this is the way Connect wants to do it. This is 924,500. Okay, check my work. Yep, that's exactly the way they want it. 598, 123, and now subtract the 2. 924,500 minus 598, 123, 326,500. Okay, again, let's check. Everything's good. So, rock on. So again, how to do this? Take your cells as is, minus your process further. That'll get your incremental amount. There is no additional cost to be subtracted. That just comes over. And basically subtract these two, we'll get your number. So the question is, should the company process further, or should they just sell as is? Well, since we got income coming in, since we got that income coming in, it should process further. Again, if this is a loss right here, that will mean the other way. We should sell it as is. Okay, so that's 9. Let's hit question number 10. Alright, so a company has already incurred 8,600. Again, we don't care what they've already incurred on cost. That is a sunk cost. That's already happened. So no matter what, it is what it is. So, product X and Y can be sold as is for $27 per unit. Okay, so now they didn't give us the complete amount, they just give us per unit. Instead, the company could incur further processing costs of $9 per unit and sell the resultant products for $33 per unit. Should the company again process further or not? Okay, so we have 6,950 times 27. If we sold it, 187,650. Okay, let's check to make sure. Now, notice this is where we gotta get. So sometimes Connect wants per unit. So it didn't like the total. So let's try 27. That's what it liked. Okay, so this makes it a lot easier for us. Woohoo! So this is again because one, we required to read. I went ahead and went from the last problem, didn't see per unit, but that's what the thing is. If you know how to do it both ways, you can tell how Connect is going to mess with you like the Twilight Zone. Alright, Sorry, sinuses are acting up on me. It is crazy. But if we process unit further, we can sell these for $33 at $9 cost. Again, there's no other cost, so incremental is $9. 33 minus 9 is 24. Now I can already tell you that's a loss of $3. So 33 minus 27 is 6. So yeah, we lost $6. So most likely, best thing is to sell as is. Again, because this is a negative, it's sell as is. We make more money that way. We can check the comparison. This one's higher than this one. So again, hit check my work. Everything is correct. Good. We can now move on to question number 11. As you can see, so far, not overly bad going on. So we're going to check in now with some division. Should we keep or eliminate? So this is a guitar manufacturer, and they're considered eliminating its electric guitar division because of its 91,980 expenses, and it's higher than it sells. So what they want us to check is basically, how do we put this together? Well, first off, sales 84,490. If we eliminate it, we eliminate 84,490. Usually that's how it's going to plan out. They don't want us to plan that out though. Good. So delete that, check my work. So far so good. Again, sometimes Connect would want it, sometimes they won't, and that's always the way we have to figure it out. So expenses, first off we got cost of goods, and really if they give us 4 drop downs, yeah they do. Indirect, service department cost. Now this right here, it already told us total expenses is going to be 91,980. So, whoop, drop, hit enter a little bit too quick there. Direct expenses is going to be your total of these two, 9,850 plus 2,750. That should be 12,600. And let's make sure, just the way Connect is, yep, that's what they want. Okay. So again, we gotta get to our total. So 2,400 plus 950, 3,350, and then last 7,400 to 630. Oops, 400. And that's 1030. Yay. And 91980. 91980. Everything's good. Okay. Now, when we look at expenses, what's going to be eliminated? It's probably the 66,000, 9,850, 950, and 7,400. Let's check. They don't like that. Huh. Are they only going for unavoidable? Yeah. Probably going unavoidable. Let's see. Because this is interesting because it's not doing exactly like we were doing in our notes. Connect wants it a different way. Sometimes I don't like it when they want different ways than what we do it. So, let's see. Because again, unavoidable does not go with us. And that's what they want. Okay, so let's see how they're trying to figure this out. So let's go ahead and just run through this. So 91,980, 84,490. So 91,980 equals a loss of 7,490. Okay, here I don't really think they need a number, but we're going to check on that a little bit later on. So revenues from the electronic division, of course, was 84,490. Avoidable expenses, guess they want us to add all those. So again, sometimes with Connect, you're trying to figure out what Connect wants. And sometimes it's good, sometimes it does it in a strange way than we're used to. So we have to actually go through it just a little bit different. And this is how this question 11 is. And basically it's greater than by 290. At least that was an easy one to actually do the math. Let's go ahead and check. Everything is okay, that's how they like it. And because it's a positive, we should keep. So let's see if we got everything. Okay, still not complete. So most likely they want us to total these expenses. Don't know why, but they do. So we have 2,750 plus 2,400 plus 2,630 and plus, I like that, plus 7,780. 15,560. It's not what they want. That's because I did total expenses, like not being smart. And I had the total. I don't know why I did that, but it happens. Things happen, mistakes happen. So, really, just, I don't know, I didn't even have to add it all, I already did it. So, it's just a loss, negative 7,780, and now Connect is happy. So again, revenue, don't move it over. Cost of goods sold, it's not moving over. They only want unavoidable expenses right here. In this column, total them up, that's your loss. Here we do the exact income. So they do want to know the income. Then they want you to re-put the revenue, add up your avoidable expenses, and see if you got an income or a loss. Again, if you happen to have a loss, it should be basically gotten rid of. If you have an income like I do, you keep it. Okay? So that's question 11. Not too bad. Okay, so now we're dealing with Worry. Worry Company has a machine with a book value of $107,000 and a remaining 5-year useful life. Well, guess what? We don't care about the book value. What we're going to see if Connect does. Usually we don't really matter about that because that's just what it is. What we care about is what we're going to trade it in for. Okay? So the new machine will reduce variable manufacturing costs by $20,500. We're going to get one for about $116,500, and we're going to receive $89,000 for trading in the old machine. Cool. So first thing is cost of new machine, and again, any outflows is going to be a loss since cash is going out. This is a loss of $16,500. Okay, next we're going to see anything that we have in trade. We do have trade, and that's going to reduce the price by $89,000. Okay, cool. So right here, again, should if we keep it. The last thing that we have is variable. So reduction in variable cost. Now, this is $20,500 per year over its 5-year useful life. So we got to take 20,500 times it by 5. It's 102,500. So 102,500. And make sure that's all that connects requiring. Yes. And should the machine be replaced? That's a big 10-4, good buddy. It's making us 75,000 over the next 5 years. We are correct. Okay, and that's all that machine is. All we're doing is comparing. If this is positive, then we're good. Again, covers the cost of the machine. All right. Question 13. Okay, well again, we're expected to sell 400,000 units. Gives us all this material over the next period. The company has an opportunity to sell 40,000 additional units at $12 per unit. The additional sales would not affect its current expected sales, of course, because these are additional units. Direct cost and labor cost per unit would be the same for the additional costs as they are for regular units. However, the additional volume created for the following incremental costs. Overhead will increase by 15% and administrative expenses would increase by 172. Calculate the combined total net income if the company accepts the offer to sell additional units at a reduced price of $12 per unit. Okay, cool. So, this is going to be interesting. It's got normal value and it's got additional volume. Alright. So, first off is sales. Normal volume was 6 million. See if I put enough zeros. I did. Check my work, see if they want that. They do. Additional volume is 40,000 units, but only sold at $12 per unit. So 40 times 12, 480,000 we expect to get. Okay, cool. Next, direct labor, direct materials, overhead, selling expenses, and administrative expenses. It's all of our expenses right there. Cool. So again, we're just copying these as they go. 800,000. Direct materials is, oh, I had these switched. Go ahead and fix these. Direct materials, direct labor. That way it's the same. 1,600,000. Okay, overhead, 400,000. Selling expense, and administrative is 1,028,000. Okay, so now we put in that one. So check my work, everything's good. Now, this is the puzzle. Usually when we're telling that these stay the same, usually you still incur cost with any additional volume. The question is how the question is worded. And the way Connect is probably doing is like that. And normally we would increase, we would have materials and labor affect the additional volume. Here, because they're trying not to do that, it's just a goose egg. Or basically leave it blank. delete. So we'll get back to those in case Connect really wants something, but nothing really changed between the two. And that usually is topsy-turvy, again, compared to the notes. Now, all we're going to do is put in what changed. So this would increase by administrative 172,000. And this would also have overhead changing by 15%. So it would increase by 15%. So here, again, we're only looking at the incremental. So 400,000 times 15 would increase by 60,000. Okay, hit check my work. Alright, so thing is, should we accept? Should we reject? I always love it how they have the question like so far down that you don't usually see it. And it looks like we probably should accept. And that is correct. And still got not complete. Okay, let's see what's going on. Alright, so again, it only says incremental cost has been changed. So what is missing? One, if we add anything else, it's going to be rejected. So, and it doesn't want these to come over. So the question is, what are they trying to ask for? Okay, Connect. Did you not want the zeros? Alright, they like 0 right there. They don't like zeros right here. So, they don't like that. I'm trying to figure out. Maybe they only want 0 for that one. Because again, Connect is being funky here. So they want something for right there. But they're not giving us anything to go by. So, the only thing, let's do this. Let's find out this way. So 400,000. Alright. Whoops. So we'll take the cost and we're going to try and make it like this. 800,000 divided by 400. It's $2. Let's go 2 times that. That's 80,000. Okay. Now check. There we go. Okay. So again, they try to mix around. So sometimes it's just trying to figure out as we go. And that means, really that's $4. So 4 times 40. Check. Okay, didn't do the math correctly in my head. Sorry. It is $4. 40, 1, 2, 3. Oh, it should be 160,000. That's 16. And there we go. So we will actually have to figure out direct materials and direct labor on the per unit base, times it by your additional volume, and that will give you your amount. Still positive. That's what threw me off here. But since it is positive right here, we should still accept. We get an extra 8 grand. Not too much, but hey, it still works. Alright. So again, that's a little tricky because of how the question's worded. As you see, I have figured through what Connect really is asking for, but we end up figuring out, and everything is peachy keen. Okay. So next, question 14. This is a scrap or rework. Alright. So company must decide. The company has 16,000 defective units that cost $5.20 per unit to manufacture. Okay. The units can be sold as is for $3 each, or they can be reworked for $4.90 each, and then sold for a full price of $8.20. Okay. If the units are sold as is, the company will be able to build 16,000 replacement units at a cost of $5.20 each and sell them for the full price of $8.20. Alright, so this is interesting how it has sales of scrap unit and sales of rework unit. Let's see what they want. Sell of scrap. Check my work. They do want that. Sell of scrap is basically, let's see, sold as is for $3 each. So 16,000 times $3 is 48,000. Okay. Let's go sales of reworked units. Okay. And the reason why I'm checking is, again, Connect does these kind of off. So 16,000 times, and we can sell them for $8.20. $131,200. Cool. Okay, check. We are still good. Now, Rework has a little things. So, cost of rework units and opportunity cost. Okay, we have to have both of those. So, cost of the rework units. We can rework them for $4.90 each. So, times 4.90. So it's going to cost us $78,400. Again, since it's a cost, it's going to be a lot less of that. So right now, it still looks good. We should, right now, rework the units, but now we got to do opportunity cost. And opportunity cost is, again, going to be the $8.20, and it's going to subtract how much it would cost us to actually replace the units. So, minus $5.20 happens to be $3. Well, we already did $3 up here. And check to make sure we got math correct. Math is correct. Again, we just lucky that the amount that we're going to sell it as is exactly the amount that ends up being the opportunity cost. So now, looks like we should sell as is. Again, odds on, you're going to sell as is because it's always going to cost more to rework a defective unit. And there we go. So again, the watch out of here is opportunity cost. Again, take the amount that you're going to sell this rework and subtract the cost that would be to actually produce an actual unit that's non-defective. And that will get us our opportunity cost. Alright. So, last question, and then we move on. So, we have another one that's manufacturing machines. And the machine has a book value of $36,000 and remaining useful life of 5 years. At which time its salvage value will be 0. Okay, so again, we don't care about book value. Throw out book value. It has a current market value of $46,000 and a variable manufacturing cost of $33,500 per year for this machine. Information for 2 ultimate replacements. So, we're going to have to calculate the total change if alternative A or B is adopted. Okay? So, alternative A, cost to buy the new machine is $122,000. Okay? Cash received to trade in old machine. It doesn't really have a trade-in for any of them. But the question is, are they going to take the current market value? I'm thinking they're going to take the current market value. Again, this is connect, and we don't know exactly how it's going to roll since it didn't really say trade-in, but they are going to take the market value, which helps us out. And reduction, again, this is going to be 5 years. This one does it for $22,800. So times that by 5, $114,000. Okay, let's check, make sure everything's correct. And they didn't like that. So they don't. It was 5 years. So let's see how they're going to do this. Connect's trying to do it a different way than what we did before. So let's take the 33,500 times by 5. Let's find the difference. So technically the other one was going to make us more, so this is actually a loss of 53,500. Let's see if that's what it is. Nope, didn't like that. So let's see, 33,500 minus 22,800. It's not liking those. Question is, what is it wanting? Does it want the 22,800? Doesn't want that either. This is confusing. What is Connect asking for in this question for that variable cost? So, we've done all the different ways. I mean, these are not positive because it's actually a lower amount, but let's put it in. And that's what they want. They want it as a positive amount, which is weird because, honestly, one is already really giving us a good variable cost. Yeah, so this is a higher cost. So it is 53,500. My bad on that one. I took it the wrong way. Sometimes you gotta watch out for that. I was thinking a different way there. I was thinking of the reduction in the actual form of reduction. But 53,500, as we can see, it's not doing so good. So again, that's taking what the new machine or old machine would actually produce in 5 years in cost, subtract from what the new machine will reduce in cost. So neither one is probably going to be good with that. But we're going to see what B. Now that we know that what Connect is actually looking for, we can do B. And B's got a negative cost of 118,000. Cost to trade in the old machine again is 46,000. Okay. So there is 10,400 times 5 years, 52,000. So 167,500. Again, that was our 33,500 times 5. Subtract out 52, 1, 2, 3. And we get a total reduction of 115,500. which is actually a positive amount. Yay! Everything good? Everything good. So, which option should they pick? Which one made the positive? Well, alternative B. Now, if both of them were negative, we would keep the manufacturing machine. If A was positive, B wasn't, we would keep A. If both of these were positive, we'll take the greater of the two. Check my work. Complete. Answers complete. And that is it. So that's it for chapter 23. Rock on. Nothing more, nothing less. So, hopefully you learned something. If you did, that's awesome. If you didn't and you have questions, leave it in the comments below. Boom, boom. So, this is Professor Naragon signing off for chapter 23.